Hey everybody, good afternoon. Hey, sorry that we're doing this later in the day. Whole lot of stuff going on today, and especially with the virus. So I'm going to jump right into it, and we'll be in and out fairly quick. So you have a picture here. I'm just going to jump right into our PowerPoint here. I'm going to skip a bunch of stuff and get right to the point, and we'll get to the charts. So there was a big USDA report yesterday that came out and said we're going to plant 97 million acres of corn, and there's a whole lot of noise all over this market. So let's cut through all the noise and let's get down to what it says. What it says is we have a piss load of corn coming your direction, and frankly, our demand numbers are horrific with ethanol on the ropes as it is. So where are we going to end the year? You know, you have this increase in supply, we have a decrease in demand, which puts us in a situation where our ending stocks increase, and we increase ending stocks as a percent of total usage. So when we look at this and this is credit of Ag Manager at K-State, they've done a great job. I want to make this real simple. We are trading here. We are trading near $4. And we're trading off of last year's ending stocks, which was right around 13%. And we are heading into a year that is going to look more like this one. I'll save the suspense. This is 1992-93. If we plant 97 million acres and ethanol gets hit, we are looking at a ending stocks as percentage of use of about 25%. And the last time we were there, corn was trading at $1, just about $2, a little bit under $2 is where we were. So corn's got a lot of room to work to the downside is my point. Don't be afraid to lock in basis, and don't be afraid to hedge, because the cash market and the futures market will work together to absorb all of that supply if and when it comes. I'll tell you the good news is that this low was not achieved until October. So we're in a situation where we could work from here all the way down into this range between now and October. So certainly, as far as corn goes today, we are in a situation where rallies should be sold and hedges should be lifted at some point when we get terms huge signs of trend exhaustion. Now, what's really confusing is the bean number. This is the same graph related to beans. The bean number from yesterday showed we're going to basically revert to all of last year's acreage, but if phase one gets done, our carryout is going to drop radically. And that would drop this ending stocks number clear down here into this 5% or worse range, which puts us down into price ranges significantly above where we are. So beans, corn have a major job to do to balance that out. And unfortunately today, the bean market is trading more like we are up in here from an ending stocks to usage percentage instead of down into here. So maybe the market knows something we don't. I don't know what it is. So let's just jump right to the charts so you can see what it is that we're talking about. All right, here are May soybeans. Now, first thing that should jump out at you is this trend line. When you connect these trends, it has been strong resistance. We tried to break it this morning and we died instantly and have sold straight off. So soybeans, if we break if we break today's low, soybeans are re-entering a downtrend, and 820 or below is the target. There is nothing bullish about this setup if we start to break lower. If we turn around and move back higher, we need to get back above this trend line at about 885 in order to have a shot to work up. So if we start getting buying and we start getting some real sales numbers come from China or other countries that are rushing to us to buy grains, that could turn this ship. And I think it's very unlikely that we see corn at $2 and beans at 15. That seems like that spread is way too out. Now, anything can happen, and I'm not saying it can't. That just doesn't seem realistic for where we are. So you've got two scenarios, apocalyptic for corn and too good to be true for beans. So something's gotta give and push that into alignment. And at this moment, we can't tell you what it is. So we're bearish beans below today's low, and we're neutral between 866 and that trend line, and we're bullish above the trend line. That's pretty simple. That's a pretty quick way to put it, and I think we'll just leave it with that. No real indication here. The odds of a higher high are just as good as the odds of a lower low with this MACD and Force Index setup. We have no directional bias coming from that indicator whatsoever. So we'll just have to wait and see. Corn. Corn's chart is interesting. We're going to go through a couple of different price levels on corn here, or a couple of different time frames. We had this move to the downside. We have this counter trend rally, and now we are selling off. But before we take this low out, remember, a downtrend is successive lower lows and lower highs. And until we really take that out and close, I'm hesitant to say that we're going to work a whole lot lower in corn. Now, there's nothing here to go buy. This could be a double bottom and stuff, but it's not a buy signal by any stretch of the imagination. So please don't log off saying Tim said corn's going up. That's not what I'm saying. I'm saying it's got some more work to do before we can really accelerate to the downside. So, and if you remember these 13 numbers, they tend to mark bottoms, and we're on a 10 here today. So we could go lower for 2 or 3 more days, and then find support for a little while to get into a place to sell rallies. Unlike beans, these are giving you directional indication that lower lows are more likely than not, and that the short position is the one to be held, and that holds true all the way below 360 on May corn. Now I want to come out and show you December corn because it looks different than May. For some reason, we're really selling December harder than we are front. Here you've got lower lows, right? You've got lower highs. You've got accelerations to the downside. This trend is in full swing. The only thing you got that maybe is a little bit bullish is that you got a counter trend indicator getting ready to fire, and on Friday could trigger a 13. That does not necessarily mean we're going to turn around and skyrocket back up on December corn. What it means is that might be some temporary support. So we do have warning signs here that this move to the downside could be running into a delay. Now, nothing in the news suggests that we're going to do anything other than but continue working lower. I'm not going to sugarcoat it. These fundamentals are really bad. So it would be a major leap of faith to step in and buy this, but anything can happen, and a 13 really should not be ignored in any way, shape, or form. So be careful if you're trading the short side here that on Friday we don't get a snap back into a DeMark 13. Let's back out and look at the monthly chart. So if you go back to the PowerPoint, and we go back to the corn number that we were looking at, right? We're looking at this number right here, 1992.93, where we traded all the way down to about $2, because that's the most likely corollary to what we're looking at today unless something changes. So what did the chart look like back then? I'm going to show you on the monthly chart. Here is what it did. We back this out. Here is 1990, December of 92. Here's October of 92. So this is that time period. Notice it got a 13 and then worked lower on the monthly chart. And then it turned around and it did actually rally. There was hope or a dawn after the darkness of this move to the downside. And it was, but it was a long time before we saw $4 corn. So what the expectation of this market would be if history were to repeat itself at the same levels would be that we would break below this support level that is held. Now, if you remember from earlier this year, I used to have the ending stocks number written, or the carryout number written down here. And if we get out to 3.5 billion bushels, that low is going to fall away because it really doesn't have much of a choice but to in that case, because the biggest carryout number we had is 2.6, I think, 2.7 in any of these years. So the odds of lower lows coming in corn are higher than 50%. This looks to be setting a new downtrend, and we really don't have much to say about it other than be hedged and be ready. Now, from a economic standpoint, remember in corn, you have crop insurance at $3.90. You have your MFP payments. You have your LDP payment. You've got your crop insurance payment. You've got your hedges that are in place. When we get down to it, the numbers even from here don't look that terrible. So the odds aren't great that the acreage numbers are going to come down that much, because when you pencil in beans and corn, insurance to insurance, corn pencils better than beans do. So the market's going to have to really discourage planting in order to switch those acres very heavily. And unfortunately, beans just didn't do the heavy lifting they needed to do today. Had we pushed up here into this 915, 920 level, I think we'd have started to shift a lot of acreage. They very clearly said we don't want that to happen because we don't need all the supply. So we have basically a race to the bottom on those commodities. Wheat had a big tell today too. It did not have a good day at all. Testing yesterday's high and absolutely collapsing. This is still bullish. It doesn't feel bullish today, but this is the bright shining spot in the grain complex. We're above our major lines. We're in a big uptrend, and we have a set of readings down here on these indicators that have shown lots of strength. And a move to the zero line on these indicators is a move that should be bought with the likelihood that this 506 level and this 512 level get taken out and it can continue to work higher. After reading the news today, I have absolutely no idea why that would happen or what the catalyst would be. But you don't have to grains don't have to trade what the news says to trade. Take a look at beans. Yesterday's news was bullish beans, and we certainly are not digesting it that way. Now, we could turn around tomorrow and be right back up here. Who knows? But stay tuned in wheat, because until we break this 462 level, wheat is more bullish than it is bearish. We're right in this congestion zone right in here. It provided some support. If I put a fib retracement line from this low to this high, we bounced right at the 38.2% retracement level. We're approaching our zero lines. We have no divergences, and we have strength behind this move. That puts the odds at better than 50% that wheat will find some strength here in this next 10 to 15 cents and start to work higher again. We will see if that holds true or not. It certainly feels like we're in a deflationary environment where everything wants to deflate at once. And certainly none of us are old enough, even the 75-year-olds. Dad, yep, that's you. You guys aren't old enough to remember a deflationary environment. because it hasn't happened in your lifetimes or in mine. So, but that is the environment that we're in, and hopefully that changes soon. Otherwise, we're going to be looking at lower prices here in a couple of weeks versus where we are. So I'm sorry to be the bearer of bad news. I'm really not trying to be a downer. As you guys all know, I love to be bullish, and I love to find reasons to be bullish. With $20 oil, with 80% of the United States on lockdown and home quarantine, I just don't see a whole lot of reason to believe that the carryout is going to decrease on any of these grains anytime soon. That's all subject to change on a whim or on some policy move, but I just don't see it yet. So it looks like we should be talking about lower prices next week, but if anything changes, we'll keep you posted and let you know. Hope you guys have a great day. We will talk to you next week. Hey, Jeff just reminded me that I messed up and didn't talk about the program tracker for 2 weeks, and I forgot, so don't go anywhere just yet. Let me show you what this is. If you remember, we started tracking a hypothetical participant who invested $10,000 to trade one contract in our Astro Spec program. That's one contract of corn, beans, and wheat. And if you had done that on February 1, where are you at? And here is what you are. You're trading with a $4,150 net gain from February 1, 41% return on investment. The wheat trade is the sole laggard in that, and we'll give it some time and maneuver it just a little bit in order to recapture some of that. So again, February 1 to today, and this account is trading at 41.50. Those of you that are in that program know that the actual result is probably a little bit better than that. So that's it. This time it's for real. Have a great day. See ya.